Hey everybody, Mark Levine from EBMG, and we are a local New York City property management firm, and I'm here with Ed McCool from McCool & Associates, also an insurance brokerage here in the New York City area. Now, we've separately covered the importance of having a policy if you are a shareholder or unit owner, and this could kind of get extended to renters too, of course.
Absolutely.
But what we didn't really touch upon in that video, but what I think is really important, is the minimum requirements and the type of insurance that you should have if you are in one of those positions of being a shareholder, unit owner, or a renter, and how they apply to that particular building.
Okay. Whether it's a co-op or a condo, the owner should have 5 basic coverages, and they typically come in the policy, and it's just a matter of what limits there are. The first one would be improvements or betterments, also known as additions and alterations. That covers what they are responsible for within the unit, which is generally laid out in the bylaws. And it could be just the paint on the walls or fixtures. It could be a lot more depending on the improvements they've made, but also depending on whether other owners have made improvements, because they're responsible for those if they want it back. We typically suggest a minimum of $25,000. Now that may not be enough, but it's still something there, and if there is damage to just the bathroom or just part of the kitchen, well, that may suffice. So I would say at a minimum, $25,000. The second coverage is personal property or their contents, okay? They are responsible for whatever they can pick up and walk out of that unit with, okay? Whether it's their couch, their clothing, their video games. Again, we suggest $25,000 as a minimum. If you're a family of 5, well, you probably need more than that, simply because the children probably have that much in video games these days. So, but again, on a minimum basis, $25,000. Then we suggest additional living expenses. In the event they can't live in their unit due to a covered cause of loss, such as a fire or a burst pipe, their insurance would pay for them to live elsewhere in a hotel, let's say, would pay for them to eat meals elsewhere. We typically suggest a minimum of $10,000 because it's usually done on a percentage basis of the contents. So it's generally 40%, and 10% would be a minimum. $10,000 would be a minimum. If they can get what's called actual loss sustained, which means the insurance company will pay for up to 12 months whatever they're losing, absolutely go for that. And some insurance companies will do that. The fourth coverage is personal liability. They can be sued for their negligence, okay? So if they do something that results in damage to someone else, for example, sometimes we've had claims where people have left the bathtub running, they forget that it's running, water overflows, causes damage to the units downstairs. Well, they will be responsible for the damage they cause, not only to the building, but also to personal property and the units of the owners there as well. So we suggest a minimum limit of $300,000. Typically a policy starts with $100,000, but it's maybe $15 to go to $300,000, maybe another $20 to go to $500,000. And the good thing about liability insurance is it's just not restricted to the unit. Yes, it covers the negligence. It also covers a slip and fall inside the unit, but it also covers things outside the unit. Okay, if their son is swinging a baseball bat outside and hits someone, they get sued, it'll cover that. Typically, most dogs are covered as well. So if your dog bites someone and you are sued because of that, they'll cover you there as well. That has some limitations, Rottweilers and such, but most dogs, coverage is provided for them. And the last one is called loss assessment. In the event that there is a claim and the co-op or condo doesn't maintain sufficient coverage, they can assess all the owners, okay? And the homeowner's policy has this coverage in it, and it will cover their portion of loss assessment, okay? So for the co-ops and the condos, we suggest $10,000 as a minimum. Policy usually comes with $1,000. I think it's like $4 to go up to $10,000. Maybe another $10 or $15 to go to $50,000. We suggested $10,000. Now, as far as renters are not required, they're not responsible for anything inside the structure, so typically we say the same thing, $25,000 in personal property, $10,000 in additional living expenses, and $300,000 on the personal liability.
Now I have a question. So what if I take my camera in the car, I have my computer in the car, and that gets stolen while I'm out and about?
Right.
It's my personal property?
It is. Now there is a coverage which is extra, okay, and it's called off-premises theft. Okay, so once you leave and something is stolen, that's where that would come into play. Now, contents is covered worldwide, basically, so if it was a different peril, then yes, the coverage would be there, but luggage in your car, your cameras, things like that, there's going to be an exclusion for off-premises theft. Now, there are some things that are excluded regardless, or there's limitations on it. Money, fine arts, jewelry, and such. So if you really have valuables, you're better off doing what's called scheduling them on the insurance policy. That's what you're doing is you're listing them, what they are, the value of them, That way the insurance company knows, and it actually provides broader coverage, and it's covered basically for almost every cause of loss of peril.
Okay, and of course we recommend to all of our boards, whether or not they already have it in their house rules, that they require a yearly proof of insurance from all residents, and this goes to subtenants as well. So like the renter's policy will come into play with the subtenants, where maybe a shareholder's renting out their apartment, subletting it out, and that's going to come into play. So they should have a personal policy for their homeowner's insurance as a shareholder.
Right.
And then the renter should have double coverage there too. They should double up so that they both are covered for the personal items of the renter, right?
Right. Well, what you want, in that case, the owner wants the renter to maintain coverage because they want to have some kind of protection there. Well, if the renter does something that's negligent that causes damage, the owner is going to get sued. Well, the owner wants some recourse there where to go against the renter's insurance policy. So an owner can be an additional insured on the renter's policy as their landlord. I get asked the question all the time as well, can the co-op be an additional insured on a homeowner's policy? And most of the time the answer is no. Okay, most homeowners carriers will not list the co-op as an additional insured on a homeowner's policy because they feel it provides too broad of coverage. So when buildings go to put in institute these requirements for homeowners insurance, a lot of the times they put in there that they are required to be an additional insured in the policy, and most of the time it just can't be done. So that's something to be careful of.
All right, good. Well, I think that's also helpful. We've gotten through a lot of good stuff today, and this is, of course, I think a good example of that. If you want to find us all over social media, you can find us at facebook.com/XLBradshaw and everywhere else, including Twitter and Instagram, and we're trying to get into Snapchat. I'm almost 40. I can't figure that out, but we're going to get there. We're at XL Bradshaw, and if you want to give your social media info as well.
Okay, you can reach us on our website at www.mccool.com. You can sign up for our social media platforms there. Don't bother with Snapchat because I'm older than 40 and I can't figure that out. So, but we do quick tips insurance videos every week and blogs, and they're very helpful.
All right, good. Well, we look forward to seeing you all around, and we'll see you next time.
Thank you.